Let me ask you something. How many times have you seen price break a level, felt that rush, and thought, this is it. This is the move. You enter. And for a moment, you feel right. Price moves a little in your favor. And then it stops. Hesitate, turns, and slowly, or sometimes violently, goes the other way. And now you're stuck, watching price move without you, or worse, against you. If that sounds familiar, it's not because you're unlucky. It's because you're entering too early. Most traders think the breakout is the signal, but it's not. The breakout is just the event. And what happens after that event? That's the real information. Imagine a clean level on the chart, resistance that price has respected multiple times. You've been watching it, waiting, telling yourself, if it breaks, I'm in. Now price pushes up, gets close, and finally breaks above. This is where most traders act, not because they have confirmation, but because they have emotion, fear of missing out, that feeling that if you don't enter now, you'll miss the entire move. But here's the problem. The market knows that. When price breaks a level, two things happen almost instantly. Buyers enter, and stop losses get triggered. That creates a surge of orders. But that surge doesn't tell you direction. It only tells you activity. Think about it like a door opening in a crowded place. People rush in. There's movement, noise, energy. But just because people moved doesn't mean they're all going in the same direction. This is where confirmation comes in, because the breakout itself doesn't tell you if the move is real. Only the reaction after the breakout does. Here's the simplest model you can use. Breakout, reaction, confirmation. The breakout is the event, the reaction shows intent, and confirmation comes after. Now let's make this practical. A real breakout doesn't just break. It holds. Price moves above the level and stays above it. Pullbacks are shallow. Momentum continues. There's no hesitation. It feels like price is comfortable above that level. That's acceptance. But a fake breakout looks very different. Price breaks. Everyone enters, and then it stalls. Small candles, wicks, indecision, and then suddenly, it drops back below the level. That's rejection. And that one difference, acceptance versus rejection, is everything. So here's a simple rule. Never enter on the breakout. Wait. And I know what you're thinking. If I wait, I'll miss the move. Sometimes, yes, you will. But missing a trade is better than entering a bad one. Most traders don't fail because they miss opportunities. They fail because they take too many bad ones. And here's something important. Most false breakouts happen within the first few candles after the level breaks, which means the most dangerous moment is right after the breakout, exactly when most people enter. So instead of rushing in, you wait, 1 candle, 2 candles. You let the market prove itself. Let me give you a real example. You're watching a stock stuck below a level for days. Finally, it breaks. Strong green candle. Volume increases. It looks perfect. You're about to enter, but you wait. The next candle forms, and instead of continuing higher, it pulls back, closes near the level, and then drops below it. Now, what looked like strength is clearly weakness, and you avoided the trade. Now, imagine the opposite. Price breaks. You wait. The next candle pushes higher, closes strong. The level holds. Now you have confirmation. Now you have evidence. Now you enter. Same breakout. Different decision, different outcome. This is the difference between reacting and reading. Most traders react. They see movement and they jump in. But professionals observe first. They let the market speak, and then they act. And here's the key. Confirmation doesn't make you late. It makes you selective. You're not trying to catch every move. You're trying to catch the right ones. And over time, that changes everything. So, before you enter a breakout, ask yourself 3 simple questions. Did price hold above the level? Did it continue with strength? Or did it come back and show weakness? Strength means confirmation. Weakness means trap. And here's the mindset shift that matters. You don't need to predict the market. You just need to wait. Because the market always reveals itself in the way price moves, in how it reacts, in what happens after the breakout, and once you start focusing on that, instead of just the breakout itself, you stop getting trapped. In the next video, I'll show you exactly where liquidity builds and how to anticipate these moves before they happen. So instead of reacting, you're thinking one step ahead, because at the end of the day, the goal isn't to be faster than the market, it's to understand it.